Good afternoon, learners and educators. I'm glad to be back here. We met on Friday and we did the reconciliations. Today we are going to look at an important topic, topic of cash budgets and projected income statement. Now, most learners confuse the two concepts. I think it is proper that before we start with an activity, we should try and establish as to what the difference is between a cash budget and a projected income statement, so that we are clear on the difference and why it is important for us to prepare such. Right, let's start with a cash budget. What is a cash budget? What is it that we want to see when we prepare a cash budget? A cash budget shows the expected. It's very much important. Remember, it is a budget, therefore the word expected is very important in this sentence. Shows the expected receipts and payments. Shows the expected receipts and payments. Right, why is it important that we should know the expected receipts and payment? It is important so that if there is a shortfall, if there is a shortfall, the business can organize an overdraft or a loan in time. What is a shortfall? A shortfall is when the expected payments are more than the receipt. It means now that the business does not have enough cash at its disposal. Therefore, in that case, the business will then need to get an overdraft or a loan so as to be able to meet its obligation. That is what a cash budget is. On the other hand, a projected income statement shows the anticipated is the same as a expected. Anticipated income and expenditure. Right? In a cash budget, we talk about receipts and payments, whereas in a projected income statement, we talk about income and expenditure. In actual fact, a projected income statement shows the profitability of a business. We want to see whether this business would be profitable or not in future, so that we are able to take corrective action if it shows that we might make losses in future. So that is the difference between the two. So it should be very clear to you, what is it that you need to do, you expect to get when you prepare a projected income statement as well as a cash budget. Now let's move to an example or an activity. I have chosen this activity very carefully because this activity deals with both a cash budget and a projected or forecast. You know, forecast is projected. You know, we talk about weather forecast, but here we talk about forecast income statement. Now, they say you are provided with information relating to Gr.12, which sells a wide range of casual clothing to teens and young adults. This business sells clothing. That's the long and the short of it. What are you supposed to do? You are requested, 1, to complete the cash budget by filling in the missing details marked with an asterisk in your answer book. Remember, in grade 11, you were taught how to prepare the whole cash budget as well as the debtors collection schedule. In grade 12, our focus is not really on preparation of these, but it is on interpreting the cash budget. What does interpreting mean? It means you should be able to answer questions based on the cash budget that has already been prepared. However, the examiner may also choose to have a question where you need to fill in certain amounts from a cash budget. So you will not come across a question where they require you to prepare the whole cash budget, because that is grade 11 work. But you may be requested to calculate certain amounts that are missing from a cash budget that you are provided with, or the projected income statement that you are projected with. Therefore, in the first part, we are going to fill in the missing details or amounts. 2, we are also requested to complete the debtors collection schedule for the month of November 2013. We prepared a collection schedule for only 1 month, November 2013, in your answer book, by filling in once again the missing details marked with an asterisk. The credit sales have been inserted on the table. Now you will see on our table, credit sales are already given. You will see debtors collection schedule. There is the credit sales for August, September, October, and November. Therefore, we need to calculate the 2 amounts that are missing. Okay? Right. Instruction number 3, they say you must complete the forecast income statement in your answer book by filling in the missing figures marked with an asterisk. Note, you are not required to work out the net profit or to fill in any figures in the grayed out areas on the skeleton provided in your answer book. Now, we would also be requested to complete the projected income statement. You will be given an answer book. They say you need only to calculate the sales, cost of sales, gross profit, and then the bad debts and discount allowed. Those are the only 5 calculations that we are going to make. The other areas have been grayed out, which means, and the activity says we are not required to do that, to do them. 4.4.1, they say we must determine the creditors payment period using the figures for September to November. The business complies strictly to their credit terms. Show your workings. 4.4.2, calculate the expected interest rate per annum. Interest rate per annum on the new loan that will be taken out in October 2013. 4.4.3, the owner has decided to increase the loan at the end of October after calculating the following financial figures. They have for us there the debt equity ratio and the return on total capital employed. They say now, quoting figures to support your answer, explain why you feel the owner's decision to take out the new loan is a good or poor decision. Is it a good or a better decision? And finally, we will also be requested the last question. Over the past few months, the economic recession has had a serious impact on the clothing industry in South Africa. I'm sure those of you who are doing economics would know what the recession is, but we'll come later to this. Discuss 2 ways other than increasing the loan, which indicates that the owner has taken the recession into account in drawing up this cash budget. Support your answers by quoting relevant figures. Those are the questions that we needed to answer. As you can see, I said in grade 12, our focus is on interpreting instead of preparation of the cash budget and the projected income statement. Right, let's start with the first calculation. We have been provided with this projected, a cash budget for the months ending 30 November 2013. So we need to calculate cash from debtors, rent income, those are the 2 under cash receipts, and then you are supposed to calculate the surplus or deficit, opening bank balance, as well as the closing bank balance. I think we can start here because we have total receipts and we have total payments. These calculations at the bottom here are very easy to do. The only thing that you need to remember from last year's work is that the closing balance of 1 month is the opening balance of the following or subsequent month. In other words, the closing balance for October would be the opening balance of November. Therefore, we simply take this amount, end of October, and put it at the beginning of November, which is opening bank balance, which is a deficit of, or an overdraft of 116,052, right? Now, to calculate a surplus or a deficit, you must subtract total payments from total receipts. Total payments must be subtracted from total receipts. Now you'll say 532,200 minus 592. It gives us 86. Actually, you say 592 minus 532,200. It gives us minus, that is why I'm putting it in brackets, because it's a minus 86,608. As you can see, the payments are more than the receipts. That is why we say we have made a deficit, or we have a deficit. Now you see, a deficit, we have a deficit of 86,608, and our opening bank balance was also a negative. Therefore, you added the two negatives, they will give you minus 202,660. The two negatives will give you minus 202,660. I think most learners will find this section very easy indeed. Those are free marks that you can get. Now, we come to calculation of the missing figures here under cash receipts. We need to calculate cash from debtors for the month of November. Therefore, we are going to need additional information. Remember, cash from debtors is, then we need to complete the debtors collection schedule. These are the goods that we sold on credit. In August, 280,000. In September, 324,000. In October, 360,000. And in November, 456,000. How is this collected? Then we need to get additional information. Additional information says debtors collection under note number 3. A survey reveals that debtors are expected to pay their accounts as follows: 15% within the same month as the sale, subject to 2% discount. 26% in the month following the sale. 50% in the second month following the sale, and the remainder of 9% is written off as bad debts at the end of the second month following the sale. Now that is how we expect the debtors to pay. Right. They have done the calculation for us for August. They have done the calculation for us for September. Now, remember, we are calculating the money that we expect to collect in November. Now, goods that have been sold in October, same month as October is October, right? Same month as October is October, where we will collect 15% of this amount of 360 in October, and then 50% of this amount will be collected in November. In other words, we say for the sales that were the sales of October, 15% would be collected in the same month, that is October. Remember, we are calculating for November, therefore we don't need to make this calculation because it will not be collected in November. Then we say, our schedule here says 26% in the following month, in the month following the sale. Then 26% would be collected in November. And then 50% would be collected in December. But we are only concerned with October. Therefore, we say, what was our total sales for October? Our credit sales. It was 360,000. 360,000 multiplied by 26 over 100. Now, say 360,000 multiplied by 26 divided by 100 gives us 93,000. It gives us 93,600. 93,600. Goods that were sold in October, we are going to collect 93,600 in November. That was that. Then now we need to make the next calculation. Goods that were sold in November. If goods were sold in November, our schedule says what? 15% is collected within the same month as the sale, subject to 2% discount. Okay? So, they were sold in November, 15% will be collected in November, 26% would be collected in December, and 50% would be collected in January. We are concerned only with the month of November. Okay? Right. What are we going to do now? We are going to take the credit sales for November, 456,000. 456,000 multiply by 15%. Multiply by 15%. How much does it give us? Now let's check how much does it give. 456,000 multiply by 15%. It gives us 68,400. However, remember, they said subject to a 2% discount. Therefore, this is the amount that we had expected to receive. From this, we must subtract the 2% discount allowed. Then we say 68,000 multiplied by 2 over 100. 68,000 multiplied, that will give us 1,360. Then we subtract, this is the discount that has been allowed. This is the discount allowed. Then we subtract it from 68,000. We subtract it from 68,000. 68,400 minus 1,360. It gives us, no, this is not 68,000, it's 68,400. Yeah? 68,400. 68,400 multiplied by 2%. It's supposed to be 1368. 1368 subtracted from 68,400. That will give us 67,032. There we are, 67,032. I know that I've taken a long method to calculate this amount. Some people will do it very quickly. They will simply say 58,000. No. 68,400. 68,400 multiplied by 98 over 100, which means from the 100 they've already subtracted the, and then you immediately get that amount. That is another way of making that calculation. 67,032. Now we have the amount for September, October, and November. Then we can get the total by adding the three amounts. Then we say 162,000 plus 93,600, 93,600 plus 67,032 is equals to 332,632. 322,632. And then we transfer this amount. We transfer this amount of 322,632 to cash from debtors for the month of November is 322,632. In our additional information, now we need to calculate the amount of rent income. In our additional information, they simply said the rent is expected to increase in November 2013. They have not given us by how much. That has not been given. Therefore, we will treat this amount as a balancing figure, because we know that our receipts are made out of cash sales, cash from debtors, and rent income. And then we have total receipts. To get this amount, it will be a balancing figure. We simply say 445,592 minus 114,000 minus 322,632. 445,592 minus 114,000 minus 322,632. That gives us 8,960, which means our rent income has increased by 960. We can even calculate the percentage increase. You will say, if the question wants you to do that, you will say 8,960 minus 8,000. That will give you 960. That will give you 960. And that this is the increase, therefore you'll say 960 over the original amount to multiply by 100 over 1. And I'm sure you will get something like 960 divided by 8,000 multiplied by 100. Therefore, it increased by 12%. However, the question did not require you to do that. I'm simply showing you what is it, how you can arrive at the percentage increase, how to calculate the percentage increase if you come across such a question in the paper. Right. Now, which means we have done instruction number 1 and 2. We have completed instruction number 1 and 2. Because instruction number 1 said we must complete the cash budget. We have done that. And then now instruction number 2 said we must complete the debtors collection schedule for the month of November. And we have done that as well. Instruction number 3, they say complete the forecast income statement in your answer book by filling in the missing figures marked with an asterisk. Fine. Now, before I proceed to the projected income statement, I want to go back here. I want to go back to this calculation. Most learners, what they do here, they would say 15 minus 2, and then they will calculate with 13%, which would be wrong. You must first calculate the 15% and then calculate the 2% of the 15%. You cannot say 15 minus 2, then you say 456,000 multiplied by 13 over 100. That's a wrong approach. You must first calculate the 15% and then the 2% of the 15%. Please don't make that error in the exam, because that is what some of you normally do when confronted with such a calculation. Right. Then we come to the instruction number 3, says we must complete the projected income statement. We must calculate our sales, we must calculate cost of sales, we must calculate gross profit. And we know, or we should know by now, that gross profit is sales minus cost of sales will give you gross profit. We have been singing that from grade 8, isn't it? Fine. In order to be able to calculate our sales, we must add, remember that the total sales is equals to cash sales plus credit sales. Cash plus credit sales will give you total sales. Right. From the information that we have been given, we know that the cash sales for November is 114,000. There we are. We say cash sales is 114,000. Plus credit sales, you go to your debtors collection schedule. From our debtors collection schedule, we have been given the credit sales for November. You see there, it says credit sales. The credit sales for November is 456,000. There we go. Plus 456,000. If you add the two amounts, 114,000 plus 456,000, they give you 570,000. Now, please do not forget this, that the total sales is equals to cash sales plus credit sales. The same will apply with purchases. The total purchases would be equals to cash purchases plus credit purchases. We'll come later to purchases. For now, let's shelve that. Now, how are we going to calculate our cost of sales? We have been told that all goods sold are marked up by 50% on cost. All goods sold are marked up by 50% on cost. That means when we calculate our price, we'll say cost price is always 100% plus gross profit, which is 50%. Therefore, selling price would be 150%. Therefore, if you want to calculate your cost of sales, you will say 100 over 150. If you want to calculate your gross profit, you will say 50 over 150. I hope that makes things easier for you or clearer. Now, we have our sales, total sales of 570,000. To calculate cost of sales, we'll say 570,000 multiply by 100 over 150. Let's quickly do that calculation. 570,000 multiply by 100 divided by 150. That gives us 380,000. That gives us 380,000. There you are, 380,000. This must be subtracted. That is why I put it in brackets, so that I should not make a mistake. And then you say 570 minus 380,000. 570,000 minus 380,000. That gives us 190,000. Alternatively, you can say, if you want to calculate your gross profit, you can say 570,000 over 1 multiplied by 50 over 150. 570,000 multiplied by 50 divided by 150. It will still give you 190,000. But it is easier this way because you have your sales and you have your cost of sales. The difference between the two amounts is your gross profit. Right. Salaries have been calculated for us. Salaries and wages have been given. Advertising has been given. Sundry expenses have been given. They want us to calculate the amount that will be written off as irrecoverable in November. Bad debts. Remember here, we said 9% of debts. 9% of debts are written off as bad debts at the end of the second month of sale. At the end of the second month of sale. Now, this will take us back to our debtors collection schedule. Goods that were sold in August, same month is August, after 1 month is September, after 2 months is October. Therefore, the bad debts of the goods sold in August will be written off in October. Remember, we are busy with November. Therefore, we go to the second month. When goods are sold in September, 1 month after, same month as September would be September. 1 month after September would be October. 2 months after September would be November. Are we together? Right. Therefore, in other words, what I'm saying is that if we sell goods in September, 15% will be collected in September. 15% will be collected in the same month. That is September. Right? 26% will be collected after 1 month. 1 month after September is October. 50% will be collected in November, which is 2 months after September. But they also say 9% must be written off 2 months, which is still in November. 2 months after date of sale. Therefore, to calculate the bad debts that must be written off in November, we are going to take the credit sales of September, which is 324,000, and multiply that by 9 over 100. Therefore, we have 324,000 multiplied by 9 divided by 100. That is 29,160. 29,160 would be written off in November. And therefore, we go to our projected income statement. We say 29,160. And then we need to calculate the amount of discount allowed. But remember, we have already done this calculation. We have already done this calculation when we said 2% would be for prompt payment. 2% for prompt payment would be given as discount. Therefore, we've already calculated the amount as 1,368. We don't need to do that calculation again because we have already done so. Therefore, we simply take the amount and we transfer it here, 1,368. 1,368. And then you are done with your projected income statement. You are done with your projected income statement. when you do your debtors collection schedule, it is always important to start from right at the beginning. I know some learners, because they say we must calculate the amount that will be written off in November, they will use this amount. Remember, for those goods that are sold in November, the bad debts of these goods will only be written 2 months after that, which is in January, at the end of January. Because 1 month will be December, 2 months will be January. Therefore, the bad debts, it will be wrong to use the amount of 456, because the bad debts of this amount will only be written off in January, at the end of January. So be very, very careful when you do these things, so that you do not confuse yourself. Right. I think we have disposed of instruction number 3, and we need to move over to instruction number 4. Where is my question? Oh, there it is. There it is. Number 4 says, determine the creditor's payment period using the figures for September to November. Determine the creditor's payment period using the figures for September to November. Now, creditor's payment period. What this question actually is asking you is that you must determine as to after how months do we pay our creditors. After how months do we pay our creditors? Remember, we pay on goods bought on credit. Creditors, which means we must get our credit purchases in order to be able to answer this question. This question actually wants us to calculate after how long do we pay after date of purchase. That is what the question asks. From the information provided, 2 deals with purchases. Gr.12 work on a fixed stock base. That is, stock sold each month is replenished in the same month. 30% of all purchases are for cash. That is very important. That is what we are looking for. 30% of all purchases are for cash. Right. Remember, we said, when we started, we said total sales is equals to credit sales plus cash sales. In the same way, total purchases is equals to credit purchases plus cash purchases. What does the question want? It wants us to calculate after how many months do we pay creditors, which means we need first to get the credit purchases, which has not been given to us. But from the information given, we know the cash purchases. The cash purchase for September is 108. The cash purchase for October is 120,000. The cash purchase for November is 114,000. I can use any one of these 3 amounts. It doesn't matter whether I use the amount from September or October. I will still get the same answer. Now, I'll show you why I say so. Right. Let's use this amount from September. They've told us that 30% of all purchases are for cash. Now, if I want to get total purchases, I would say Cash purchases of September, 108,000. Over 1 multiply by 100 over 30. What is it that I'm trying to calculate? I'm trying to calculate total purchases. Okay? Right. Total purchases, I'll say 108,000 multiply by 100 over 30. Now 108,000 multiply by 100 divide by 30 is equals to 360,000. 360,000. This is my total purchases. I'm sorry about that. This is my total purchases. Now, to get my credit purchases, I know that 30% is for cash, it's on credit. Total purchases is 100%. Therefore, 30% is, therefore, my credit purchases would be 70%. Total purchases, 360,000 multiply by 70 over 100 is equals to 252,000. 252,000. Okay? Remember, this information that we are using is for the month of September. This information is for the month of September. What means? So it means in September we bought goods for cash to the value of 108 and we bought goods on credit to the value of 252. But we have still not answered the question. The question did not say we must calculate credit purchases. The question said what? Said after how long do we pay creditors for goods bought on credit? Now, I'm going to my cash budget. In my budget, I see payments to creditors, cash paid to creditors. In September, we paid 210,000. In October, we paid 252,000. What does that mean? Therefore, I can conclude that the goods that were bought on credit in September, amount of 252, was paid in October, 252. You see, the 252,000. There it is. We paid it in October. When did we buy them? We bought them in September. Therefore, I can arrive at the conclusion that creditors are paid 30 days. Creditors are paid after 30 days. What am I doing now? Creditors are paid after 30 days. Of course, there are different ways of doing this calculation. Someone else might do a different calculation. Someone else might say, fine. Where is that information that I'm looking for? Where is that information that I'm looking for? Someone else might do it differently. I can calculate my total sales for September. Total sales for September. Total sales for September is, cash sales is 216,000. 216,000. That is my total, my cash sales plus credit sales for September. Remember, my credit sales for September is how much? 324,000. Credit sales for September is 324,000 plus 324,000 is equals to 216 plus 324 is equals to 540,000. 540,000. But I know, then what have they said here? They've said Groovy clothing work on a fixed stock base, that is, stock sold each month is replenished in the same month, which means after I've sold the stock, I immediately replace it in the same month. But remember, this is sales. Now, to get cost of sales, I'm going to say what? I'm going to say 100 over 150 multiply by 540,000. 100 divided by 150,000 multiply by 540,000. 100 divided by 150,000. 100 divided by 150 multiply by 5. That will give you 360,000. These are my cost of sales for the month of September, which is cost of sales is the same as purchases because stock is replenished in the same month. We maintain a fixed stock level. Cost of sales, you see this amount. Then the calculations after that would be the same as this way. So irrespective of which method we are using, we are able to calculate that amount. Therefore, the answer to 4.4.1 is that the total sales is that debt creditors are paid after 30 days. Creditors are paid after 30 days. Yeah. Right. Next question. The next question that they asked was, where are the questions? Where are the questions? (4.4.2). Here we are. 4.4.2. Calculate the expected interest rate per annum on the new loan that will be taken out in October 2030 on the new loan. Expected interest rate per annum. Fine. Where is our cash budget? Here is our cash budget. What did we do with our cash budget? Okay, here it is. Here it is. Now I go to the month of October. They said we took out a new loan in October. There it is. Can you see that amount? 180,000. It means we took out a loan. Loan amount is equals to 180,000. What is the interest that was paid in November? The interest that was paid in November is 7,200. I know what most of you will do. What most of you will do, which is incorrect. They will say 7,200 over 180 multiply by 100 over 1. Then you will get something like 7,200 divided by 180,000 multiply by 100. And then you will get 4%. That is what most of you will do. And this will be wrong for two reasons. They said we must calculate interest on the new loan. The 180,000 is fine. Therefore, to do the correct calculation, you will have 180,000 over 1, not over 1. You take this amount, the interest, 7,200, minus the interest of the previous month. Remember, can you see that in September we paid interest of 4,500, right? In October we still paid interest of 4,000, which means we still had other loans. Are we together? We still had other loans. This is the new loan. And then we are starting to pay the interest on this new loan. We obtained the loan at the end of October. That is why we are starting to pay interest in November. Therefore, the interest that we paid on the 80,000 would be the new interest minus the old interest of 4,500. 7,200 minus 4,500. There we are. 7,200 minus 4,500. 2,700. This is the interest that we are paying on the new loan. This is the interest on new loan. But the question does not want that. It wants the interest per annum, which means you must calculate the interest rate. Okay? Fine. Now we have our interest. We have the amount that we borrowed. Must multiply by 100 over 1. But also multiply. Remember, this interest is paid, is the monthly interest. Therefore, in order to get the yearly interest, we must multiply by 12 over 1. Some of you normally forget this last portion of the calculation. Most of you, not some of you. Most of you will normally forget to multiply by 12 because the 2,700 is the monthly. Then you can say 2,700 divided by 180,000. 180,000 multiply by 12. 2,700 divided by 180,000 multiply by 100 multiply by 12. That will give you 18%. Alternatively, what you can do, you can say 2,700 multiply by 12 to get the total interest for the year. Then you divide that by 180,000. Alternatively, what you can do, you can say 2,700 multiply by 12 to get the total interest for the year. 2,700 multiply by 12. Then we have 32,400. This is the interest for the year. Then you can say 32,400 over 180,000 multiply by 100 over 1. Divide by 180,000 multiply by 100. Then you have your 18%. You can use any of these two methods, but you will still arrive at the same answer. The important thing is that when you are given a question like this, you must first get the interest on the new loan. Most of the people would use this amount, the 7,200, instead of getting the difference between the new interest and the old interest. So therefore, the difference between the two is the interest that we are actually paying on the new loan. I hope that is clear. I think now we are going to break for 10 minutes, and after the 10 minutes we will complete the rest of the activity, because there are still about 4 questions left on this. No, actually it's 2, but there's also some other things that I would like us to look at under the same topic. Thank you.